This is a cash flow forecast question. The question we're doing is 2012, paper 2, question 3. And we're doing a cash flow for Lee Limited. Now a cash flow, like a household budget, looks into the future. It does not look back at what happened in the past. It tries to predict the future and the future cash flows for a business. So where the cash is going to come from and where it's going to be spent for a business. Now businesses prepare these to try and predict months maybe where there'll be cash shortfalls or months where there'll be cash surpluses. They also try to predict maybe areas where they can make cutbacks in different forms of expenditure. Maybe to see if they need to have a sale in a particular month to raise some cash in that month. Also they're used to present to investors or to banks when seeking finance. So cash flow looks into the future. The way this works in the junior cert is normally you get a partially completed cash flow forecast and you're asked to go on and complete the rest of it. Now in this 2012 question, I have left this box here that I've just clicked on blank. They actually filled it in the question, but I just want to explain what's happening in case there was a year it came up where it wasn't filled in. What's happening here is we're saying this business will have, they're predicting they will have 10,800 in cash at the end of March, the closing cash for March. And of course the closing cash for March becomes the opening cash for April. So that 10,800 goes out there. Also, what wasn't filled in the question is that the 4,000 here, the opening cash at the beginning of the 6-month period, gets brought out, as it would in a household budget, gets brought out to the total column out here. And you put the 4,000 out there. Now that normally isn't given in the question. You have to know to bring out the total at the beginning, all the way out to the end. So let's start filling in the different parts of the budget with the information that were given in the question. So the first bit of information it says cash sales are expected to increase by 25% beginning in July. So that means that they're going to continue at the 80,000 level all the way up to July, when they will increase to 100,000. Now, very common mistake here, especially the way these questions, when you do out these questions, if you're given the first 2 months or 3 months and they're all filled in digitally, and then the rest of it you fill in yourself in pen or pencil, preferably pencil, you can rub out your mistakes. People often, when they're doing their total, they just total up the months that they did and forget to do the February and March. Of course, we need the total for February and March as well to get the total out here. So just be mindful of that. And the total is 500,000 euros. And I have put all of those in the wrong row. I'm just going to drop these down here. There we go. So the cash sales are all here. And a loan. It says Lee Limited will receive a loan of 180,000 in June. So 180,000 there. There was no February or March loans, so 180,000 there. And then we total down the way for each month. Find the total. Now the way to get this figure here, the total receipts for the all months, obviously add these two together and it'll give you a figure, and then you should cross-check it by adding these 6 figures across the way here as well to check that they both match up. And the figure here is 680,000. Okay, coming down to payments then. It says cash purchases are expected to increase by 20% beginning in July. So they're going to remain at 26,000. Sorry, 26,000 all the way to June, and then in July they're going to increase to 31,200, which is an increase of 20% in July, giving a total of 161,200. light and heat, payable every 2 months, is expected to decrease by 700 in June. Maybe they go away on holidays and they're not using as much light and heat. The business might be closed or something for holidays, or maybe it's air conditioned. Actually, no, that wouldn't be correct. They'd be using more electricity, but maybe less heating, so less oil and gas. So 2,200 there, and 1,500 in June, 700 less, obviously, giving a total of 5,900. Wages are expected to remain the same, except in June, will there be an additional 8,000 in bonuses paid. So it's going to be 16,000 in April, 16,000 in May, 24,000, the extra 8,000 in bonuses, and 16,000 in July, giving a total of 104,000. Transport costs are expected to remain the same every month. Okay, there's no information actually given here about motor vehicles, which means that the purchase of motor vehicles in March is all that happened with motor vehicles. So you bring that out to the total column. Don't forget that. That'll be a common mistake, just to forget to bring that out. Transport costs are going to remain the same, so it's 5,000 every month. At least this is what they're predicting anyway, to give a total of 30,000. Now buildings, it's saying Lee Limited will take over ownership of the building on payment of 280,000 in June. The rent will cease after May. So in June they're going to buy the building maybe that they're currently renting for 280,000, giving a total of 280,000. But the rent then ceased at the end of May. So you only have April and May with rent because they now own the building, giving a total of 14,000. Okay. And then we'll total up the payments columns here. Okay. There we go. And as with receipts, you should add these down the way and then check across the way to make sure they both add up to the same. And the total is not that. I've gone wrong here somewhere now. Sorry, I'll tell you why I've gone wrong. That should be 280,000. There we go. 645,100. Okay, next thing, the predicted net cash. The difference between total receipts and total payments for each month is the net cash. Obviously you see in March they're predicting a negative net cash because payments are greater than receipts. It'll be positive in April, 27,300. So 80,000 minus 5,500, 29,500. In June, it's going to be negative again, quite a big negative. Obviously, they bought the building there, which was a massive expenditure for the firm, and then positive again. And in the total column, it's going to be positive to the tune of 34,900. By the way, I forgot to mention, the reason they use the term cash sales and cash purchase as opposed to sales and purchases is because this is a cash flow forecast and it's only predicting what you're actually going to get paid for. If they're making credit sales or buying goods on credit, of course there's no cash flowing there. It's only when the payment is made does the cash flow. So that's why they've distinguished between sales and cash sales and purchases and cash purchases. Okay, back down here now again. We have our net cash here, which is what we think we're going to save during the month. The cash we Lee Limited think they're going to carry at the beginning of the month, so you add those two together to get closing cash at the end of the month. And of course closing cash at the end of the month becomes the opening for the beginning of the next month. And net plus opening gives closing. Closing for this month becomes opening for the next month. And then net plus opening, in this case a minus, we'll give a minus closing cash. Closing cash for one month becomes opening for the next month. and then you add those together, and then to check 34,900 plus 4,000, which is the opening cash we brought out from the start here, and we'll see if these match, and they do. Both figures matching there, to give us an idea that we've been right in our calculations.